Hi, I'm Martin McCarthy, Investment Specialist at Wilson Asset Management, and today I'm sitting down chatting with Portfolio Managers Catriona Burns and Nick Healy. Catriona, we just finished global reporting season. What were your key takeaways?
So the US economy continues to be very resilient. We've still got low unemployment. We've got some wage growth. The inflation numbers have been stickier, perhaps than Chairman Powell would like, but we are heading in the right direction, but not yet at the kind of 2% target level. So the actual earnings of companies, though, have been remarkably resilient. And we're super pleased with the companies that we have in the fund, which have continued to perform strongly.
Yeah, I think a great example of that, at least from earnings season recently, was our holding in Icon. They had really good order growth and they grew the pipeline of work by over 10%. Really strong cost control allowed them to grow earnings by over 20%. And equally important, management was very upbeat about the prospects as we look forward. And if we think about how we've positioned the fund for the earnings season, as much as the things we've held, we've also taken a conscious decision to avoid certain parts of the market. We've avoided more discretionary consumer goods, cyclical industrials, and because of our valuation discipline, just those very expensive stocks. That worked to our advantage just because those were some of the more challenged parts of the market this earnings season. And all in all, we are very happy with how our companies came through earnings season and the results they delivered.
And when we, if you apply that more broadly across the rest of the world, it's a very similar story. When, say you look in Europe, we've seen certainly services companies do better than goods companies. Manufacturing sector has been under pressure, so more cyclical businesses under pressure. In Japan, they're dealing with inflation for the first time in decades. And so you've seen, a lot of companies struggling to actually pass through that inflation. So yeah, we're generally very pleased with the companies in the portfolio, but it's interesting the nuance between the different sectors.
Fantastic, thanks guys. And obviously there's been a lot of noise recently in the media, geopolitical tension, interest rates, potential recessions. As investors, how do you guys navigate that environment?
Yeah, absolutely. There are certainly a lot of big picture events that could drive the market in one direction or the other. You listed quite a few of them, but those are certainly all things we keep an eye on. I think being cognizant of the fact that it is an uncertain period, we've positioned the portfolio to benefit across a range of outcomes. By owning companies that are both high quality and that have these multi-year earnings drivers that will occur regardless of economic outcome, it gives us a lot of confidence just in the fact that the fund would perform well, come what will on those bigger picture thoughts.
And our view is ultimately that earnings drive share prices. And so often, uncertainty and concern about events such as the ones you mentioned can really create opportunities. And we saw that, for example, in the COVID sell-off period where we got lots of really exciting opportunities and you get the opportunity at those times to invest in businesses that perhaps you didn't have the opportunity, that you thought the valuation was too expensive or you couldn't see the catalyst, but yet then you see these big, you see sell-offs at different points that give you opportunity. And for example, Quanta was an example that we invested in 2020. They upgrade and maintain the transmission grid across the US and the communications infrastructure. We took the view that with everyone moving to Zoom and Teams and having to do video conferencing with cloud transitions, that the work that was needed to do on the electricity and transmission grids across the US was going to continue. We knew the management team. They had their teams out on the ground upgrading and maintaining the transmission grid despite all the noise from COVID, because everyone needed to be online all the time. And so we took a view that the market sell-off was a massive opportunity, knew the team, and so we took advantage of the dislocation. So sure, there's always going to be noise and events to think about, but we think that often creates opportunities that we can take advantage of.
So management is critical to your process. How do you ensure you're investing in the right people?
Absolutely, it is. The management teams that we invest in are really key in terms of executing because we're trying to identify companies that can grow sustainably over time. And if you have a bad management team, running the ship, it can really do some damage and affect that ability to execute. So a crucial part of our process is getting on the road, meeting the management teams of the companies that we invest in, competitors, suppliers, former employees, really to understand what's going on in that business and what the strategy is, and watching them execute over time. So we travel across US, Europe, Asia, really identifying those really high quality management teams that we want to invest with.
And a great example of that, I think, is in our holding in Icon. We've been very impressed with Dr. Steve Cutler and his team in how they've stewarded the business over the last few years. They acquired PRA Health, really integrated that well, and that put them in a leadership position in the industry. And they've had fantastic cost control, which has allowed earnings to grow really well. There's great opportunities ahead for Icon, and we do think this is the right management team to make sure that they make the most of these opportunities. So absolutely, management's critical, and across our portfolio, we really believe in the managements we've invested with.
Catriona and Nick, thanks for your time today, and thanks for watching.